Ever felt like you're missing out? That pressure to act quickly, that is FOMO, fear of missing out. In investing, it's everywhere. It pushes people into risky trades. It makes them buy at the wrong time. And often, it costs them money. But why does it happen? Why do smart people fall for FOMO? The answer is psychology. Humans are wired to follow the crowd. In the past, it meant survival. Today, it plays out in financial markets. When everyone buys, we feel safe buying too. It feels like the right choice. But in reality, it's often the worst time. Because when hype is high, risk is higher. Social media makes it even stronger. One viral post can spark a buying frenzy. Screenshots of profits spread fast. People rush in, afraid to miss out. This is herd behavior in action. Prices rise because everyone is chasing, and the cycle feeds itself. Until suddenly, it breaks, and late buyers lose. That's the trap of FOMO. It tricks us into thinking we're acting rationally. But in truth, we're driven by emotion, and markets punish emotional investors. The real driver is dopamine. Our brains release it when we expect reward. Rising prices signal reward, and that chemical rush pushes us to act. We fear the window will close. We fear others will win while we lose. So we jump in without thinking, and we chase the pump. This urgency is powerful. It blinds us to logic. But after the pump comes regret. Prices drop. Panic selling starts. Losses become real. The cycle repeats. Fear, greed, regret, again and again. So how do we resist? First, recognize the signs. If you feel pressure to act fast, pause. Ask, is this based on logic or emotion? Second, build a strategy before investing. Set entry points. Set exits, and stick to them. Don't let social media guide you. Third, accept missing out. You won't catch every pump, and that's okay. Opportunities will always come again, but chasing every hype will drain you. Smart investors wait for value. They play the long game. They know patience pays. Remember Warren Buffett's rule: be fearful when others are greedy, and greedy when others are fearful. That's the opposite of FOMO. Instead of chasing, he waits. That's why he wins long term. The truth is, discipline beats emotion. But FOMO thrives on emotion. That's why most lose when chasing pumps. They're buying at the top, while smart money sells. The crowd fuels the exit of insiders, and the late buyers take the losses. But once you understand this, you gain power. Awareness is the first defense. You see the pattern. You stop reacting blindly. You start acting with intention. Not chasing, but waiting. Not fearing, but analyzing. This is how you break free. Because missing one pump won't ruin you, but chasing many can. Bubbles always pop, and regret always follows FOMO. The good news is, you can choose differently. You can control your decisions. You can invest with patience. You can focus on value, not hype. Remember, markets reflect human emotion. Fear and greed drive prices more than logic, and FOMO is the most dangerous of them all. But knowledge is stronger than fear. Discipline is stronger than hype, and patience is stronger than regret. That is how you defeat FOMO and build lasting success.